Alrighty, guys. Now we're going to go into looking at the trial balance. So this is part 2 of chapter 2 video summary that I'm giving you. All right. So now we're going to be looking at the trial balance and the financial statements. Okay. And don't worry, I'm also going to go ahead and post how to begin it with the homework just the way I did in chapter 1. All right. So just chill. Here we go. So the trial balance is the listing of all the ending balances of the accounts in the ledger. Okay. All of them for the month or for the day or for the year, for the quarter. That's what it is. The list is in the same order as they appear on the chart of accounts. All the assets, all the cash, the assets, then of course the liabilities, then the owner's equity, then revenue, expenses, whole 9 yards. Okay, so you'll see the transactions that are here, and notice you'll have footings as well of the new balance here. This is the summary of the transactions. This is not the trial balance sheet. Okay, and this is based off what we've done before with Mia Wong. All right, so this is the trial balance. Notice what it has. So this is the balance after everything is done. She has $7,200 in her cash. She has $2,100 in her accounts receivable, money owed to her. Office equipment, she has $1,000 worth of office equipment. That gets detailed later on. Money that she owes, $500. Remember, she had $300. That money that she owes. And notice each one is on the correct side for the normal balance, debit and the credit. Okay, her capital, credit. Her withdrawals, debit. Her legal fees, okay, credit. Her salaries expense, debit. Her rent expense, debit. Her her advertising expense, debit as well. Now, notice on either side, they balance out. Again, for every debit, there's a credit. Even if there's multiple debits and one credit, the total has to balance out. Okay? Like when we started with the capital. She invested $6,200. That's total. But it was 2 debits, the $6,000 in cash and then the $200 that she had in equipment. But it still ended up being the $6,200 for both. Okay? For the cash and for the capital at the beginning. The income statement, of course, once the trial balance is complete, all the accounts are complete. The way we showed you just, I showed you last week on the month of October, all those ending balances, you then create your income statement, then your owner's equity, and at the end, your balance sheet. Okay? Notice your income statement, which is just revenue and expense. That's it. Did we make money? Yes or no? Owner's equity goes ahead and shows the amount of money that is there as well. Then afterwards, how much she has. As far as the money. Then you also have, not the money, but the investment that she's made. Then on the balance sheet, you have it has each asset, liability, and the new figure for capital, should there be a new figure for capital. Okay? So this is what it looks like. This is something that is in your book and that you need to remember also, okay? That you have your trial balance and each account, all the arrows show you where it goes into the income statement. Again, your assets, your expenses go into the income statement so that you can determine whether or not you have made money or not. Then this net income comes into the owner's equity for the month, okay? What the capital is, what she started out with, always there. And then the money that she made, yes or no, did she make a profit or a loss for September? And any withdrawals that she has for September. Then the increase in capital, because you subtract the $100, okay, from your net income, you end up with the $3,600 that's there. Okay, sorry, I don't know why I did that. And then, of course, you then add both the capital and the increase in capital, not the loss. So you add these two up and you end up with how much equity she has at the end of the month, how much she has a right to. Then from that balance sheet, you take the amount of your equity and you're going to put it here. All of these are going to be the balances that you already have, okay, from your trial balance, which is your cash, your accounts receivable, your office equipment, your accounts payable, and then now your new capital based on the transactions that happened during the month. And notice, voila, they balance out. It's magic. No, it's not. It's what ends up happening. Everything has to balance out. Everything on both sides of the equation must balance out. Okay? So this is what we did in this chapter, and I know this is a little how would I say? That this is a little short, but this is what ended up happening. Let's go back up to the trial balance, and again, showing you that this is what ended up happening, how things actually ended up where, and let me see if I can go ahead and magnify that a little bit more. Here we go. Well, oops, too much. Where you're taking the money from your trial balance. Again, all the transactions that we did, taking the balances, putting them in, then going into your income statement, and then again going into your owner's equity, and then making sure that it comes back out into your balance sheet and how everything balances out. Your income statement will tell you whether or not you made money that month, yes or no. Same thing for the quarter, for the end of the year, whichever. And then it also will tell Mia Wong whether or not she has an increase in the owner's equity or how much she has as far as what she actually has a right to. And then, of course, the balance sheet, making sure that everything balances out again. Okay? Analyzing all your transactions, debits versus your credits. What do we have? And these are the financial statements that we work with on a day in and day out basis, and the trial balance that we work for and that we work with. Okay? So next what I'll do is I'll prepare your demonstration as I did last time, and make sure that everything is good to go so that you can continue to work. All right? And again, should you have any questions, you know how to go ahead and get a hold of me. And you can either do it through your Google, the Hangouts, or through your texting, or through email, or through the Moodle mail. You can call me on the phone in my office, but like I told you, don't do it. If I'm in my office and it rings, then I catch it. If it doesn't ring, then I don't know that anything's there because I'm always looking at the computer, right? And I'll see you on the flip side.